All right. So today I want to talk a little bit about. All right. So I guess my name is Braden Dotson, and today I want to talk about knowing exactly how much life insurance is really needed. And unfortunately, there really is a lot of misinformation out there. And chances are, when you run across your average life insurance agent, they're really not going to try to help you figure out how much you really need. What they're going to do is figure out how much you're willing to buy. And they're really good at that. They use emotion to figure that out. Um, So, but honestly, the best way to look at this really isn't from an emotional standpoint. It's something that we can calculate exactly how much is needed. So today, what I'm going to show you is a simple way to figure that out. I really hope I broke it down simply enough. So you might have gotten this form, you looked at it, and saw the words, the lines, and the numbers, and your brain might have froze up a little bit, but so hopefully I can show you that it's really not that complicated. So the way that I see it, um, it really is. So needed insurance and more of a insurance of more luxury variety. So let's go over first. Let's go over the needed insurance. This is what everyone needs if they want to take care of their family. So where you start is you start with the monthly expenses. So you want to take into account the mortgage and the car, the different insurances, the utilities, and the other things. For example, let's say your mortgage is $100 and you have a car payment you're paying on every month for $500. That's a nice car. Let's also say that all your different insurances, homeowners insurance, health insurance, even other small life insurance policy, homeowners insurance. Um, let's say that all adds up. You're paying $800 a month for that. Let's say your utilities, so it's your electrical bill, the water, plumbing, all the different things. Let's say you're paying $700 a month for that. And again, I'm just pulling these numbers out of thin air. I don't know how true they are. But also, it's important to take into account the other smaller expenses we might be paying a month. So we can take into account maybe how much gas we usually spend. So maybe $100. How much we spend on food to feed the family. Let's say maybe we pay $800 a month for food. Of a family of six. And all the other different small little things we might be paying on a monthly basement. As long as they're predictable, we're going to want to have them here. And really, we don't want to leave anything out or shortchange it, because what we're doing here is we're making sure that something were to happen to us, that our loved one would be able to keep making all these payments that are owed. So the next thing we're going to do, and that to total it up for us here at 4,300, and again, that's just a fake number. I'm not saying that's exactly what you need. You probably have very different numbers. But the next thing you're going to do is you're going to subtract the sources of income that would survive you. For example, 300 sources of income might be your spouse's income. Let's say she has a part-time job, she's working, and she takes home $700 a month. You might have some stock dividends or some sort of trust set up that would keep paying us even after you died. Maybe you have a pension you haven't maxed out that would be left to your spouse. Let's say you have a $500 pension. So it's gonna be added up here. So that's the income that would keep coming in even if your income no longer did. If something were to happen to you if you died. So that's $1,200, and you're gonna subtract that from that number, and that brings up to monthly income that your loved one would need without if something were to happen to you. And then the next thing you're going to do is you're going to times this number here by 12 to obviously find out how much it is a year, how much you need. You times that number by the number of years you need replaced. So by 12, and then by however much you think, and really how many years you need replaced. That's something that's going to depend on every different situation as well. It depends on how long you expect these expenses to kind of be the same, how long your children are going to be at the house, what are your longest commitments that you might have. Well, that's where this number comes from. And let's say you also going to have to add in a funeral fund for you, and usually that's $10,000 to $15,000. The smallest I've ever seen is probably about 10. But let's say you want to make sure everything's okay, $10,000 or $15,000, and you want to also add in an emergency fund. Because like I said, up here, that's just your standard expenses, the predictable things. But as we know, there's also a lot of things that are completely unpredictable. For example, the car breaks down, or some sort of plumbing disaster, like the basement floods. And it's usually recommended to have about $5,000 or maybe $10,000 of an emergency fund. Because that's an emergency fund that's supposed to last them, again, that 15 years you're replacing the income. And then also, you want to minus out any life insurance that you already have. Say you're paying on a whole life policy for $80,000. So that's, you want to minus that out from life insurance that you needed. And you're also going to want to minus out any liquid assets your wife would have access to. Say you've invested in your either you have in your savings account or stocks you might have invested in. Let's say you have in your saving you've invested in some stocks, or in a mutual you have invested in a mutual fund, $10,000 or $100,000. So what that's going to do is going to come out the number here of really the life insurance that is needed, that everyone needs. And once again, that number is going to be different for everyone, completely different. Your expenses might be a lot smaller. You might have more existing life insurance. You might have invested a lot more. You might not need 15 months of income replacement. You might only need 10. You might need 20. So once again, that's going to be different for everyone. Then that brings us to more of the luxury types of life insurance. Once again, this is needed, and this is just nice to have if you can afford it. You're not going to find a lot of insurance agents who are going to tell you that it's a luxury. They're going to say you're needed as well. But a lot of times people want to make sure that any outstanding debt they might have incurred during their life, that their loved ones would not have to take care of that without them. So they're going to take care of either the mortgage or the cars or any other debt that they might have. So let's say you want to leave your house. You have a $300,000 house. You want to make sure that that's paid for. If something were to happen to you. So you put that here. That's going to come out here after $300,000. But something that we have to remember is that if we're paying off the entire mortgage, we're no longer going to have to make that monthly payment. So we're going to get rid of that, and that's going to drop your needed life insurance a lot. I'm down to $151,000. But you're going to add that to the payment here. So $451,000 is now the amount of life insurance that you would need. Another form of luxury insurance that people often use is called estate planning. So that's if you want to make sure your entire inheritance makes it to your loved ones. It's often people pay for the estate tax portion with life insurance. Fortunately, here in Idaho, there are no estate taxes or inheritance taxes, and for federal taxes, they only apply for inheritances over $5 million. So if that doesn't apply to you, also you don't need to worry about that. And the other thing that people often take care of is called college planning. So that's making sure that if something were to happen to you, your children would still be able to get that education you desire for them. So obviously that's, you type in the number of children, times that by whichever college expense you might think it is, whether it be $20,000 or $30,000, and that comes out being the coverage needed. And that adds up to how much life insurance is needed. So in this case, this fake man, like I said, would need this number and this number So he would need $451,000 of life insurance. However, that much life insurance might come out with a premium, depending on how healthy and how young you are. That might not be attainable. So in that case, it's important that what we would do next is we would lower. We could get rid of this. Like I said, it's luxury, but we'd add up the mortgage back here. Or another thing that you can maybe think about is lowering the number of years you have applied for. To say maybe only 10 years of income replacement. Alright, so I hope that was helpful. That's how you can tell exactly how much life insurance you need. Alright, see you later. Bye.